XRP pulls back from $2.27 peak yet maintains uptrend structure above $2.15. Traders should watch the $2.15 pivot, as holding this level could lead to a bounce, while a break below may trigger further declines. Technical breakdown accelerates despite institutional product rollouts as XRP tests critical support amid broader market weakness. Multiple XRP ETFs launched throughout November, including Franklin Templeton's EZRP on November 18th, joining Canary Capital's XRPC and several Bitwise products. Combined first-week ETF flows exceeded $245 million, signaling substantial institutional interest during the rollout. Despite strong inflows, ETF trading volumes slid 55% from peak levels, reflecting diminishing retail enthusiasm. Broader crypto markets weakened as Bitcoin volatility increased ahead of its death cross event, dragging altcoins. Lower.ETF narratives created optimism, but market liquidity remained fragmented, limiting momentum for XRP despite increased institutional access. XRP fell 4.96% from $2.27 to $2.16, breaking below the $2.20 support level. Total session volume surged 54.56% above monthly averages, reaching 236.6 M XRP traded. Breakdown triggered a slide to intraday low of $2.11 before recovering to the $2.15 to $2.17 zone. Resistance formed at $2.28, while stabilization attempts clustered around $2.155, $2.166. Post-breakdown consolidation printed a tight range, indicating temporary seller exhaustion but no confirmed reversal. XRP's reversal from $2.27 into a sharp decline toward $2.16 confirmed a full breakdown of its short-term bullish structure. The failure to reclaim the $2.28 resistance zone, coinciding with early session ETF excitement, revealed that institutional product launches were insufficient to offset technical fragility in the underlying spot market. Volume expansion of 54.56% above monthly norms validated the sell-off, particularly as the breach of $2.20 unleashed cascading stops and forced long liquidations. The intraday rebound from $2.11 demonstrated that buyers remain active beneath key support levels, but the recovery lacked volume conviction, stalling almost immediately at $2.18. This lack of follow-through underscores the current imbalance. Strong ETF flows create structural demand, yet broader crypto risk-off conditions overpower near-term bullish catalysts. A bearish pennant formed through compression between $2.155 support and descending resistance at $2.18, suggesting that the market is coiling for another directional move. Momentum indicators remain bearish with price trading below key EMAs and showing no signs of trend reversal. The inability to lift beyond $2.18 to $2.20 keeps XRP vulnerable to further decline, while the tightening range reflects market indecision rather than accumulation. For bulls to regain control, price must break above the pennant's upper boundary and reclaim $2.28, a threshold that now represents structural confirmation of regained upward momentum. Traders must monitor whether XRP's consolidation above $2.155 represents stabilization or simply a pause before continuation lower. The next catalysts remain ETF-related, with additional Bitwise launches scheduled through November 25th, though recent declines in ETF trading activity suggest diminishing short-term impact unless broader market sentiment improves. The $2.15 pivot is critical. Holding the level offers potential for a bounce toward the $2.28 to $2.30 corridor, while a decisive break below opens the door to a rapid sell-off toward the $1.98 structural support cluster. XRP's near-term trajectory will also depend on Bitcoin's volatility regime, particularly whether BTC stabilizes after its death cross event or drags altcoins into deeper retracement phases.